Hey everybody, Rob Mauer here, and today we are talking about a couple of updates on Tesla in China. We've also got a lot going on in the markets with the Federal Open Market Committee meeting. We've got a minor update on the Tesla Cybertruck and more. All right, we'll start off with the stock. Tesla up 4.75% today, closing at $181.41, continuing to rise about 1.6 in the after-hours session right now. The Nasdaq on the day up 2%. So a positive reaction today to the Federal Open Market Committee meeting. You can see a couple hours before market close, the jump when the federal policy statement came out, and then continuing to rise actually in a reversion to what we normally see from the Fed Chairman Powell comments afterwards. So I just want to start off with that. We'll look at some quick takeaways. You may have seen me tweet this out earlier today, but in the statement you can see here from the December meeting and then the updates today. Of course, they did raise 25 basis points and more importantly changed some of the language in the statement, pointing out that inflation has eased somewhat in contrast to the previous statement, which noted that inflation remains elevated. So I think that's an important change. And then also very much worth noting, they said in determining the pace of future increases in the target range, last time they would consider cumulative impacts of their changes. This time they said in determining the extent of future increases in the target range, they would consider those things. So pace to extent, I think, is also an important change there. And then when we get into Fed Chairman Powell's comments, a few things I noted through that. He did say that they do anticipate that ongoing increases will be appropriate. He said it's our judgment that we are not yet at a sufficiently restrictive policy stance, so kind of putting out some things there that, hey, the job is not done yet. He said that the last 3 months of data show a welcome improvement, but we will need substantially more evidence to be confident that that will continue. Shifting to a slower pace would allow the committee to better assess progress towards those goals. He did reiterate that he does still feel like the risk of over tightening is less significant than the risk of undershooting where the interest rates need to go and letting high inflation return because of that. He did give a lot of comment on the changes that we're seeing sort of by bucket in inflation categories. So he said for goods over the last 3 months or so, we're definitely seeing disinflation. So the inflation rate, although still a positive rate, coming down, which is good to see. Housing, although they're not seeing that disinflation really hit the reports yet, they are seeing leading indicators of that, so they expect that to happen relatively soon. And then for non-housing core services, which I think he said makes up about half of the PCE, he said that it's not showing disinflation yet. So although overall things are coming down, they really do want to start seeing in this category of non-housing core services, which probably comes later than some of these other things, with goods being a little bit more supply related. He really wants to see that coming down as well. Said, I think we need to see that. We expect to see it fairly soon. Until we do, we have to complete the job, and it would be premature to declare victory. So that's going to be a huge item of focus when we do get the CPI report next time around. That's on, I think, the 14th of February. And then I think PPI a couple days after that. Not sure exactly when PCE is this month. So those are more of the, I guess, hawkish statements from him, but he did have just an overall more positive tone this time around, more dovish tone this time around than we have seen in previous comments. He said we can now start saying for the first time that the disinflationary process has started. Expectation of inflation is coming down, which is a very positive thing. That's a huge thing for Powell. He doesn't want to see the expectation of inflation become entrenched because he feels that that leads to sort of a runaway cycle for inflation. And he was also asked if there was any discussion about pausing rate increases at this meeting, and he didn't really want to answer that, which seems to imply that there probably was conversations about, maybe not doing 25 basis points, maybe taking a pause this time around, but he deferred on answering that question, said just to look at the minutes when those are published in 3 weeks. So usually when we get the minutes, we have a pretty good understanding of what's going on, but probably a little bit more interesting in this meeting, so we'll keep an eye out for those. So I think probably the two big things, keep an eye on non-housing core services, and then the meeting minutes in a few weeks to see if there was conversation about pausing, which kind of sounds to me like there was. All right, a couple more things in the stock realm. We did have a filing today from Tesla that indicated that BlackRock has taken a 5.7% stake in Tesla. So this filing needs to be made if a company an entity has more than 5% ownership in the company. This is an update from last year though. So previously in 2022, or I guess the end of 2021, they had reported 5.3% stake. So 5.7% stake now. They've increased their ownership a little bit. Obviously, that's a huge number of shares, but for the BlackRock, somewhat of a smaller increase. Still good to see that, but not anything too major in terms of news. All right, getting into probably the main Tesla news item for today. Reuters has reported that Tesla is planning to raise Shanghai output after price cuts stoke demand, sort of the headline here. I'm not sure that the headline is entirely accurate to what they're trying to report. So if we take a look at how the article actually reads, they say Tesla plans to step up output at its Shanghai plant over the next 2 months to meet demand ignited by aggressive price cuts on its best-selling models, according to a planning memo seen by Reuters and a person with knowledge of the plan. The automaker plans to produce a weekly average of nearly 20,000 units at its Shanghai factory in February and March, according to the memo, which detailed output plans for Tesla's most productive and profitable manufacturing hub. So although they do mention the reason for increase in production here as an increase in demand after price cuts, which obviously that'll happen naturally, but to what level is kind of the main question. And they seem to be saying that they're increasing production back because of those price cuts. But of course, as we know well, this 20,000 unit per week rate, that's what Tesla was basically at in, I believe, October and November. So it shouldn't be too surprising for Tesla now after a little bit of a shutdown in December. Then, of course, Spring Festival, Chinese New Year here in January. Without those things happening, for Tesla to return to that rate, although it was not a certainty, I think is something that shouldn't be all that surprising. Still, I do think that's a positive that we are seeing this report from Reuters here. And, if we do get back to that level of production, I think that will quell some of the concerns that have creeped in. We seem to be kind of moving past those in general, but if Tesla can sort of maintain that rate, I think that's a good thing. In terms of this being a reaction to demand, maybe. Again, demand is going to increase, but I think Tesla probably always had this plan, and the price cuts were more of a reaction to fill this production than this being a reaction to the price cuts, if that kind of makes sense. So it sounds like the memo basically just said, this is what the production plan is, and then Reuters kind of layering in that reason of demand being ignited from the price cuts. So those are kind of my thoughts on that. That's pretty much in line with what I'm forecasting for the first quarter, but good to have at least a report offering not confirmation of that, but at least a little bit more, solid in terms of our expectations from this report. The other comments on Tesla in China today from Teslarati. They've got an article here that says Tesla price cuts in China drop competitor sales by as much as 60%. So basically looking at NIO, Li, and XPeng in January, noting that many of them have seen quarter over quarter or month over month or year over year drops here in January, and by as much as 60% in the case of XPeng. But this is not a conclusion that I agree with. Certainly we're going to see an impact from Tesla's price changes on competition, but attributing these drops to Tesla solely is definitely not accurate. This year we do have Spring Festival in a different period of time than we did last year. So if you look at 2022, Spring Festival for Chinese New Year, that occurred from the 31st to February 6th. So most of that occurring in February. Of course, that pretty much shuts everything down in terms of vehicle sales, vehicle production, etc. And that this year we've got that happening, of course, in the sort of last couple of weeks of January. So that's a major impact to January this year, less of an impact to January last year. That's going to be driving most of these changes that we're seeing. Now, Tesla is up year over year, but Tesla's had significant production increases and is also shifting a little bit in terms of the delivery strategy and cadence. So that probably explains what's going on with Tesla, plus, of course, the price cut. So, we'll have to wait a longer period of time to really understand what the impacts of the price cuts are for Tesla in terms of the competition, but I just wanted to provide some context on that. And then moving on, we've got an update here from Alex Potter of Piper Sandler. He has reiterated a $300 price target and overweight rating of Tesla stock, but following the 10K report, which of course we talked about yesterday, a couple of items that he brought up that I think are worth mentioning. So we've talked about I've mentioned a couple of times about how when Tesla discloses what they expect to recognize in terms of deferred revenue, the actual revenue recognition has come in below that. So I've gotten that, from Alex Potter pointing this out. Historically, he's tracked this, and you can see the actual here versus what Tesla has disclosed as the expected amount. So that's forward leading by 12 months to what the actual recognition is. So of course, we've seen over the last few quarters Tesla saying, it's going to be about $1 billion. Now that number has dropped to 620 million or so, I think, after Tesla recognized a significant chunk in the fourth quarter. But it just kind of shows the variation from Tesla historically versus what's been expected. With this number coming down, I think it's more likely, but it is a good idea to keep that in mind, as we look at what that number is going to be for the coming year. And then another item here that he pointed out that I think is super interesting and we'll have to keep an eye on for future quarters more closely, and that is a warranty reserve. So this quarter, in the fourth quarter, Potter noted that the warranty reserve increased to about 4.5% of, I believe that's cost of goods sold. So he's basically saying that there's a 200 basis point hit to gross margin based off of the warranty expense reserve. So that has increased, as you can see here, from the historical levels where Tesla has had that expense line. So he gives a few reasons that he thinks this may be happening for Tesla. Conservative accounting ahead of Cybertruck launch, new factories, I think in particular, as some of those production processes get ramped up, Tesla may need to, or may prefer to, reserve a higher warranty expense just to cover any growing pains alongside those production ramps for new products. I think you could also throw 4680s in there as well. He then also mentions inflation causing higher repair costs, which warrants a larger warranty reserve. That's going to drive costs up everywhere, and if that's not adjusted for at some point, that would have to happen in the reserve. And then worsening quality on existing products, more defects. So potentially, that's basically, he's listing possible reasons here. I would tend to agree more with the first two. Worsening quality on existing products seems a little bit less likely. Tesla continues to refine things more and more over time, so obviously they can financially benefit from keeping these expenses low. Less service keeps costs down there, and that's a direct reflection of what we're seeing on these lines. So hopefully it would be associated with more of these things of being more conservative with new products, new factories, and things like that. But we'll have to keep an eye on that closely in the quarter because it obviously closely in the coming quarters because it obviously had a big impact this time around. So good note there from Alex Potter. And then on the Cybertruck launch, we do have an update on that from Elon last night on Twitter. He did say that he was just reviewing the Cybertruck production beta, and it is incredible. So we heard them talk a little bit about this on the Q4 earnings call, saying that they had produced a number of these beta production vehicles, and I think they were still going to continue to produce a few more of those. But with all the production equipment starting to get in place, exciting to see Tesla, making steps on finalizing this. Remember from the Ride the Lightning interview with Ryan McCaffrey and Franz von Holzhausen, Tesla's chief design officer, the comments that Franz made at that point in time were that, there's never really a pencils down for Cybertruck, and right up to production, then even through production, we're constantly, trying to iterate and improve things. So it doesn't necessarily mean this is a final vehicle, but getting very, very close to that stage where they'll start to put these vehicles, into the production plan. So exciting to see that. It's going to be painfully slow as we work through this the next year, basically, but we are definitely getting close on the Cybertruck. Next, we've got an update from Indonesian president on the potential for Tesla to be investing in the country. So we've heard these constantly pretty much throughout the last year, but we've got a new update here saying that he does expect Tesla to finalize a deal to invest in a production facility in Indonesia, and that he's offered concessions in terms of mining nickel and tax breaks on electric vehicles. The quote here is, quote, "I said to him that if you invest in Indonesia, I will give you the concession of nickel," end quote. And then also pointing out some of the other EV incentives that Indonesia has laid out. So although we have consistently heard reports like this, I suppose it is, a positive sign that he is talking about some of the benefits that are being offered to Tesla and that are being a part of that negotiation. So again, said he was confident that, this investment will happen. And he did also say, an interesting update here, if they want to start from an EV battery, it's okay. So previously we've heard a lot about Indonesia wanting any investment that is nickel related to be sort of like full value chain from mining to actual final product in terms of the vehicle. And it sounds like they're okay if that doesn't happen immediately. Maybe the initial investment starting out with mining or more battery production related, and then eventually something that is more vertically integrated. That could be in conversations with Tesla saying, it would make sense to do this at some point, but we're just probably not there yet in terms of the product roadmap, maybe getting down to that cheaper vehicle. So that's just kind of speculation on my part, and maybe Tesla is there. Hopefully they are pretty close to that where it would start to make sense, but good to see that that is at least an option for Tesla in Indonesia. All right, last few things here. Then we've got a report out of Norway. They've done some range testing, this publication, Motor-NO in Norway, and they have found that the Model S, the updated refresh Model S standard or long-range version, non-plaid version, has set a new winter record for range testing of all the vehicles that they have tested. It surpassed the Model 3 dual motor that they had previously tested. They say that the record in this case is 530 kilometers, which would be about 330 miles in their winter testing. So they say that this was achieved even though the battery, for some reason with a technical problem that they did not say what it was, could only be charged to 98%. So it would have gotten a little bit further, obviously not too significant, but would have done a little bit better than that. They also just checked the range that they were able to achieve in this winter test versus the WLTP range, which is a little bit more favorable, I believe in most cases, although Tesla tends to, I think, state it a little bit closer to reality. The WLTP testing standard, compared to what they got in these range tests, Tesla's Model S was only 16% below it in this winter testing. Model X Plaid was 18% below the WLTP range. So again, any car is going to be less efficient in cold weather, just how it works from a physics standpoint. But you can see here the other results from other vehicles. Most of the differences were significantly higher than the percent differences for Tesla. Probably the median there in the 25% range. The worst performer was the Toyota BZ4X, which we've talked a couple of times about problems with that vehicle, but 36% underperformance to the WLTP range for the Toyota. So it's nice to see, Tesla performing well in these winter tests. Unfortunately, they don't share a whole lot. They share the route and things like that, but they didn't share a lot about the exact temperature or the speeds. They just said that they followed the speed limits on all of the, throughout the route, which you can see here. So we don't know the average speed or anything like that, and obviously that's going to have a huge impact on the amount of range. But good to see, on the same route, Tesla outperforming. All right, next we've got an update from Hyundai. They have announced that the IONIQ 6 has been rated in terms of EPA rated range, and the highest range trim is expected to get an EPA range of 361 miles. I'm not sure exactly what the battery capacity is on this, but historically the IONIQ line has been one of the more efficient vehicles in terms of EPA testing. So I think that is the case here. Again, 140 combined MPGe on the IONIQ 6. You can see here though that most of the trim ranges are coming in between 270, 316, so right around 300 miles, with the rear wheel drive long range version, the one up there at 360. So again, I'll probably check into the battery pack size here, but a very efficient vehicle and should perform relatively well in terms of competitive offerings, maybe outside of Tesla, but at least with that set of competitors. All right, last couple things. I think I already said that, but truly last couple of things. Rivian has announced, or has told employees rather, that they expect to lay off 6% of the workforce just to improve their operating efficiency. They said that this will not affect production workers, so workforce outside of that would be probably a larger percent cut, but no effect on the workers in the factories right now, which should help them maintain production. But this is certainly not the only layoff that we've heard. I think there were a couple other announcements today, and we kind of continue to see that trend. So I think Rivian, we've talked a lot about, needs to get those operational costs under control, and they're taking at least some steps here to do that. And then finally, we got an update from Lotus, not a company that we talk a lot about, but Lotus is going to be IPOing via a SPAC process, and it looks like they're targeting a $5.5 billion valuation in that IPO. So we kind of continue to see this. To me, it seems like maybe not a last-ditch effort to capitalize on these brands, but we've seen the Porsche spinoff, we've got the Lotus IPO here, and I think there are other examples as well. But I'm not sure on the timeline of this, but we'll keep an eye on that SPAC process as well. Usually those happen pretty quickly. All right, that'll wrap it up for today. So as always, thank you for listening. Make sure you're subscribed and signed up for notifications. You can also find me on Twitter at Tesla Podcast. And we'll see you tomorrow for the Thursday, February 2nd episode of Tesla Daily. Thank you.